Yo, what's up, guys? Welcome to episode 8 of the Funded Journey. So, if you watched the last previous video, you knew that one of the accounts was literally $40 away from being breached. That account ended up getting breached today. We took a trade on it, was up 180, and then came into drawdown for like $50. So that account got breached. But if you watched that video, you also know I passed an account in one day. I also have a YouTube video on that, which is right here. Passed in one day. So plus $3,000 literally in one day. Two trades is all it took, and I passed the account. So today I took this trade, which was on this funded account, which made us about $1,024 on that account. Uh, at this rate, 2 more days will be good for a payout. So let's go over why I took this trade at 9:30 open. First, though, this trade I took during London session. Woke up at 3 a.m., got a glass of water, and figured, well, let me see if the charts got anything going on. Ended up seeing right away that we had a fair value gap and we fucking came down into it. I entered on the break to the upside and equal highs were right here. So that's what I targeted. Quick 300. Bang. Done. Easy. And above VWAP. I mean, that's an easy trade. Right here, though, is the main trade. Let's go over this. Obviously, on the 5 minute, we have a change in state. Pretty much just means there was hella volume to the upside, right? There's a strength to the upside, but we broke this structure, pretty much meaning we want to now change, reverse, go to the bottom. So, right there, step one. I look for a change in state with buy side liquidity being swept or sell side liquidity being swept. It doesn't matter which. In this case, nothing was really swept. We just had a clean market structure shift. Now, for my entries, right now, obviously there's nothing going on. Oh, wait, right here, we got the fair value gap, right? That's a great entry for you to enter shorts, but I personally liked the inversion better. That's where I entered off of this candle wick right on the inversion. I had my stops at the 5 minute high of the wick and obviously take profit at those London lows, like I said. Now, that trade hit TP fairly quickly, A plus setup. It was beautiful, gotta love it. But let me show you why we could have held a little longer. Just like right here to this sell side liquidity, pretty much. But also down in here, you could have, that's sell side liquidity as well. But my main thing here is I want to show you this 15-minute candle that has no wick. Now, listen, if you've been trading for a while, then listen, every single candle, almost 90% of them have wicks, okay? And if it doesn't have a wick, the market likes to, you know, end up coming to create a wick for that candle that didn't have a wick. Pretty simple, but you got to be careful. Like, look right here. If my chart is like this candle looks like it doesn't have a wick. But if I spread it out like that, you can see it does have a wick. So sometimes they hide, but that is a strong confluence that market potentially wants to seek that to give it a wick. There's no wick there, okay? Which means this candle opened and it just went straight up, okay? But anyways, that's just a little bonus for you guys. I literally scalp based off of candles having no wicks. You can take scalps like that. Anyways, that was the trade we took for the funded account. The funded is now at funded account's now at $51,024. Uh, two more trades should be good for a $1,500 payout. So that's that. All right, real quick though, I do want to go over this trade for one of the members in the Discord. Just kind of show him what I'm seeing, and definitely I understand why he took the trade. It went off of his edge, his system. Can't complain about that. Everyone has their own system. But there's a couple things that I already see that I potentially wouldn't have entered where he entered right here. I believe he sent me the screenshot. I'm just trying to make it as close as it is to the screenshot he sent me, and I believe this is where he had his entry, which was right here. I didn't see any executions marks, but this is where he had his short position. So right around in this area, which I don't know whether he's going off of the break of structure purely. So he would enter it on this candle because it closed under this structure. So, change in state, which is fine. And he also took this on the 2 minute. I'm just going to use the 3 minute as an example because personally, in my own opinion, I think the 3 minute is just more clean. I can, if you look here, you see very clean price action, not much chop, right? And then let me go to the 2 minute. kind of, it's clean, but there's a little more chop. It's all preference, and in my preference, I just like the 3 minute. But to each their own. It doesn't. It's kind of irrelevant, whatever you like better. So first, we're gonna go to the 15 minute because the 15 minute had a huge bearish fair value gap, which we wicked into, and obviously now we're rejecting. So kudos to you for seeing that. That's great. Obviously, strong resistance zone. Perfect. I'm gonna go to the 5 minute. Look at this. Let me delete these real quick. Let me delete these. So, dude, honestly, I'm deleting all of this stuff. I'm gonna do this. I'm gonna do this. Okay, just so you kind of see it a little more clearly. And I'm gonna delete this. Okay. Now, we are in that 15-minute fair value gap zone. For example, act as if we're taking this trade for the brand new, okay? Oh, okay, nice. We're in this 15-minute fair value gap. I think we're going to use it as resistance. Perfect. I'm going to go to the 5 minute. Let's see what the 5 minute looks like. Oh, okay, nice. We have a bullish fair value gap. Okay. Could this be used as support back to the upside and use it as a wick into the 15-minute fair value gap again? And then come back down? I'm not sure. Let's see how it plays out. Okay, this is like kind of what I'm thinking as I'm trading. All right, 3 minute. Let's go to the 3 minute. What's the 3 minute look like? Okay. Oh, that 5 minute fair value gap's the same as the 3 minute fair value gap. They're in the exact same spot. That's strong confluence. That's a strong zone, right? Okay. Let's see what happens. Okay, we came into it. Oh wow. Okay, we came into it. I want to get a break first, though. I want to break below this fair value gap because I don't know if it's just going to wick me out. All right? Because look, market could easily have done this. Fill that gap just to come back up, wick into the 15-minute fair value gap, use it as resistance again, and then come down to then do this, right? Market could have did that. So I would have waited until we fully got a break. So right here, it could have used it as support and went back up, and you could have got wicked out for this entry. Again, I don't know what your whole system entails, but I'm just going to show you what I'm seeing real quick. So I'm going to wait on the 2 minute. Bang. Okay, we have a break. Okay, what this is telling me now is on this 2 minute fair value gap, this 3 minute fair value gap, it doesn't really matter, right? 3 minute fair value gap, bullish fair value gap is showing me we broke through it. Okay, we no longer want to use it as support. We broke through it. Chances are it's going to be used now as what? An inversion. So that creates an inversion. What am I looking for now? I'm looking for an entry pullback into that inversion, right? My stops are going to go to the same spot where you had yours. Why? Because that was the 5 minute candle high, which I like. That's where mine would have went. Bang. Hold on. It may be 15-minute high. No, it's not. What am I tweaking? Hold on. 5 minute, whatever. Okay. 5 minute high right here. That's where my stops are going. Okay. My take profit is going to go right down in here. This is pretty close to an equal low. It's not, but it is close to it. I'm just going to count it as sell side liquidity, and I'm also going to count right here on the 5 minute as sell side liquidity. Perfect, right? 2 take profit zones that are strong confluence, and even down here is a strong liquidity zone where we could have potentially one more contract to just run to TP. We'll see though, right? Who knows what market's going to do. Now, on the 3 minute again, okay? I'm going to put a limit order because I'm just going to kind of like show you guys, like for an example. Take 3 contracts. I'm going to put my limit order up here on that inversion because at the same time, I got a better entry. So now naturally my stops aren't going to be so much higher, right? So we'll sell that. We're in, right? Not yet, but let's see what the 3 minute does. Okay, it wicked in. We got up, we came up. Perfect. That's what we want. And we also got stronger confirmation that we broke through this inversion or the fair value gap. We also got a stronger confirmation that we broke through the fair value gap to create an inversion. Came back into it, into some drawdown. Not too bad. Let's play it out. Okay, market's moving really well, right? Like we had a great entry, waited for the fair value gap to get broken through to then use it as an inversion. Perfect. Had our stops at the 5 minute high of the candle. Take profit is down here at the sell side liquidity. At this point, I'm going to sell one contract, trim, 1/3, bang, done. I'm out. Now what am I going to do? I'm going to move my stops right here. Might as well. What the hell, right? Lock up bread just in case. Let's even lower these down here a little now, just to see how it plays out. Let's continue going. Okay. At that point, I'm selling another contract because we broke through our third take profit. Bang. Perfect. Let's move this right here on the VWAP. So no matter what, we'll still make $100 even if we come up and get stopped out. And on that same time, I'm going to lower this down here to this liquidity. So let's see. Boom. Okay. No worries. That's what happened. How much did we make on that trade? $400. Okay. Made $400 in that trade. That's literally the system I trade. That's how I trade. That's how I take profit through the trade. That's how I move my stops during a trade. That's how I enter a trade. Just like that. Okay. So obviously, you guys can like hopefully see the difference between the trade that I would have taken and then the trade that he took. Again, you know, his trade hit take profit for him. Good shit. You locked up bread. That's all that matters. But I do want you to see like you could have like your entry was solid, right? You could have still traded like that with your entry, but dude, lower your take profit. Like kind of get more out of your trade. You could have potentially got a 4RR if you took your entry at this spot, right? Granted, you still could have got wicked out, and I guarantee you, and I would love for you to give it a try. If you start waiting for the potential break on the fair value gaps to then be used as inversions, I bet your win rate would go up, and you would notice it. So, because like these trades, like you entered early, in my opinion. For me, you entered early. Based off of how I trade, you entered early. I would have liked to see the break, which we got right here, and then I would have entered. But again, you know, to each their own. If you win with the trading setup or if you win with your trading edge, that's all that matters, honestly. And if you are able, kind of watch trading during noon because that's lunchtime. So, like, you kind of get like sporadic moves like this. Like, you could have got wicked out easily, you know, volume's dead. So, who really knows what's going to happen? But again, solid trade, good shit. And hopefully what I showed you helped you a little bit and maybe you can implement it and it would help. But that being said, hope you guys have a good one and see you guys in episode 9. Happy trading.